Hi, Warriors. Dale Pinkert here at TradeGATEHub. We're sponsored by TradeView Markets. I want to start off with US dollar yen. On Monday, I left you with longs from the 138 breakout level. Here's the breakout level. Get a better look at it on a daily. We came all the way back to this blue line and held. I've been talking about a rally towards 141. We're long from the 138.20 level, so you have nice profits. Nothing wrong with booking it. So far, we've stopped at the big round number of 140. I still think that'll give way going into the BOJ next week. I think they protest too much about changing yield control, so perhaps they deny it long enough for the yen to make upward progress towards this 141 level plus, and that's going to be a reverse out short for me up there. Looking at what happened in euro pound is a big situation in my view. We've broken out to the upside. Here's euro pound. So if I go the daily, the important thing about this is not if you're long euro pound or not, but the implications of what it means going forward for which currency, if you're bullish a dollar, is going to display more weakness, and when you're bearish a dollar, which one will display more strength. This is saying to sell rallies in cable and buy dips in euro. Euro really hasn't corrected hardly at all. Put on a short yesterday. I have pip envy for people that got short cable, but that didn't happen until today, the breakout. But from going forward, cable's going to be the preferred short, although I still think that we can get a pullback towards 111.5, 111 in euro. Remember when I was talking last week about this Monday, about the big breakdown we had, that I thought that we could get a retest of the breakdown and then perhaps make one more low in the dollar. But you know, you look at the weekly, and for having a big breakdown, you have to admit follow through has been negligible. So where's the collapsing dollar? It's my contention that we're forming a low here, and eventually we're going to close above the breakdown to make it a breakdown failure and lead to a pretty good dollar rally. I talked about being negative commodity currencies. Aussie having another negative week. Really double topped up here, both Kiwi and the Aussie sell rallies against 69. I don't think we should take out 69 now. Canada, I talked about buying dips around 31.5. We're almost there. And then when I look at Canada on a little shorter term time frame, I think maybe it was 2 hours. Let's see. That's it. So you see how you have that flat moving average. That's a 200-day at resistance above 32.5. So this is going to be the major barrier and a breakout in Canada. I'm bullish Canada. Look for spots to buy it. Talking about gold, gold reached fib targets 1980. We still could do 2000. I'm looking for places to trade the short side in gold and silver as well. I said would have trouble between here and 25.35. What was the high here today? 25.20, coming off pretty good. So silver as well could be a short here with a dollar rally. And I just wanted to leave you with just a little bit of a warning. Through my research, I found that we're at a DeMark sell, a 13 on a DeMark sell. And when you look at some shorter term stuff, we are diverging in here. A lot of people said we could go 4,600. Well, S&Ps are up a lot. Again, they're up 10. Be careful out there. Although the S&Ps are up, I have to point it out, maybe it won't last much longer, but the VIX is still well above the solstice low of 1270. Well, it could take it out today, but be alert for reversals there. And the big debate right now is on the 10-year. Are we going to do this? Are we going to have the 10-year do this from here and yields drop like that? I'm betting that we hold, maybe down 370, 360, and then start heading up again as inflation comps begin to get more difficult. As year goes when you had gasoline much higher, so the comps have been pretty good. Some of the good inflation numbers might be behind us, so I'm not in the camp that yields are going to collapse. I think it's just going to be a pullback, and then you have a double top up here. Measures pretty good, measures over 5%. So good luck to you guys out there today. Last thing I want to bring to your attention, since we're also on the verge of breaking out, look at this 200-day moving average in crude oil. To me, looks like we're going to come out to the upside. Maybe we could trade mid-80s on WTI. Don't just count your pips, count your blessings. Trade with less leverage, wider stops, let your trades breathe, and I'll see you in the room.